Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us for the segment, we have Chris Gannatti, head of European research over at WisdomTree, to discuss an artificial intelligence ETF and trends to watch in new tech. Chris, it's great to have you with us. Welcome to Trade Talks.
Thank you very much. Great to be here.
All right. And there's just so many developments that's taking place with these newer technologies. Let's start off and talk about autonomous driving and electric vehicles. What are you watching there?
I've read an incredible statistic about the training where what it said was if you had 100 cars and your idea was you want this fleet of 100 cars to drive 20% better than a human driver, you would need those cars to drive 24 hours a day, 7 days a week, 365 days a year for about 400 years while they could cover 14 billion kilometers. And so one of the interesting things that you're seeing major car makers like Porsche seeking to do is use video games and simulations to get those mileages up so that it's not necessarily, it would be incorrect today to think the car is literally driving itself down the streets of London where I physically am, or the city where anyone physically is. It's more, you have these advanced driver assistance systems. I read a requirement in the US for 2021, all new cars are going to have some sort of a self-braking capability. So things like the car maybe avoiding a collision or braking are part of the path towards the ultimate autonomous driving, which very well could still be some years away.
Right. And that's an important distinction to make, because I think people think of automated driving as, okay, you're an autopilot, and that's not really the case. Let's move on and talk about, let's talk about robotic process automation, because that's not just for technology. I mean, think of all the applications you can use, let's say healthcare as an example.
Absolutely. So many industries are actually using this technology today. There was an incredible IPO that happened in April. It was for the company UiPath, which tends to be known as the category leader. And what these things can do is, if you think of whether it's a health insurance company, a car insurance company, whatever the case may be, you have desks and desks, well, pre-COVID anyway, desks and desks of people sitting next to each other doing pretty much the same thing 5 days a week, for 40 hours. And you then say, wait a second, there are certain patterns. They're moving the numbers around. They're saving things in different files, getting those Excel spreadsheets. So if the software can recognize the patterns of these activities, it can offload some of the repetitive work from the people to the machine, letting the people have, hopefully, a better work experience.
What about natural language processing? How can that be applied?
What's exciting these days, so there's a lot of fanfare around the GPT-3 model, which has 175 billion parameters, which is almost not even a conceivable number. But what's interesting is there's a lot of hype right now based on the idea of these types of models can help people like me. I've never written a line of code in my life, essentially get to a point where maybe we're talking to a computer program, a piece of software, and that software can convert, similar to translating one language to another. Maybe it can convert what I want to do in plain English, hopefully, into computer code, like whether it's Python or SQL or other things that could make me even be able to utilize coding even without knowing it cold myself. So things that can help people code without coding experience, that could be very interesting in the coming years.
And Chris, let me ask you about this. Let's shift gears a minute from the technology and talk about the ethics and regulation, because as you know, regulations approach differently in the EU and UK as compared to how we approach it in the US. So even though the technology might be standardized, the regulation around it there's a lot of variables there.
What seems to be popular across much of the developed world these days, and even China, is going up against, if you're in the political space, going up against the technology companies in various ways. And depending on where you are, could denote how you're going to go up against them, whether it's anti-monopoly, anti-competitive behavior, privacy-related behavior. That comes up more in the UK or in the EU, less in the US. But all of these different things where you've got, for instance, data, and the ownership of that data is hugely valuable, as we've seen in the $1 trillion club. The reason Amazon and Microsoft and Apple have $1 trillion+ market caps, it comes down to what they've been able to do in monetizing data. Facebook, what it's been able to do in monetizing data. And so you're clearly seeing in certain cases, companies like Facebook, which have had one set of practices, are being viewed, and actually it's Meta now, it's not even Facebook, so Meta is viewed a certain way, versus a company like Microsoft, which is viewed in a completely different way. No company is perfect, but essentially those companies that are perceived to deal with privacy and ownership of data in more reputable ways seem to get a pass or easier treatment from governments these days. So ethics is going to continue to be an interesting question, and we're going to have to see how the regulators continue to approach it.
And of course, we have to talk about the semiconductor shortage. I mean, that seems to be one of the biggest headlines that we're following in financial media right now.
Huge headline. It's unlikely that it's going to be completely solved in at least a few years. But one of the things I learned through this was you've got one set of chips, whether it's NVIDIA or ARM or Samsung, where you're talking about getting the circuitry down to the 2 nanometer level by 2025. That's what Samsung's talking about. And that's what you're going to see in data centers for the big models like GPT-3, 175 billion parameters, as we've said. That's sort of one type of computing. But then you have the chips that could be worth $1 or less that go in the car, and companies like Faraday and Renesas are making those. And that's the main reason. It's not the cutting edge chip that costs potentially thousands of dollars. It's the chip that's worth less than $1 that needs to go in the car, and there might be 30 or 40 or 100 of them depending on the car. And that's really where the bottleneck has tended to be. But right now it seems that that's biting significantly. But many people are saying in 2022 it's going to start to ease. Huge capital investment across the semiconductor space these days.
All right. Now, speaking of investments, let's wrap up here and talk about an artificial intelligence ETF, a WisdomTree that can give investors exposure to this type of technology.
It's incredible in the sense that what we're thinking about is a value chain approach, where essentially you've got 3 types of companies. Those companies where their main business might be something like robotic process automation or natural language processing, essentially the core of what AI is today. Then you've got those companies that are providing the hardware like semiconductors. There is no AI without semiconductors. That's an important point to make today. And then finally, you've got those larger, more diversified businesses, which just so happen to be some of the biggest companies in the world. They've got the data, and a small investment in AI on the scale of Microsoft could be bigger than most companies that might solely focus on robotic process automation or natural language processing, just by virtue of how big Amazon is or Apple is or Microsoft is. And so mixing in the appropriate manner the exposure across what we call the AI value chain, we think gives people that unique tool to capture the space.
All right, Chris, appreciate all the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.